obviously have made all these mistakes before.
Yeah.
Anyway, so yeah, let's get going. So hello everybody, welcome to another episode of Chatter. Today I am delighted to be joined by Ali from Trading Secrets, the YouTube channel, an investor in MMTLP, former investor in Nvidia, having just sold for a tidy profit, and yeah, I'm sure numerous other stocks, many of which we may mention today. So welcome to the show, man.
Yeah, thank you very much, Josh. Very pleased to have you on, and I think you did a great job earlier in your video with the bird lady. And I think since that previous video, a lot has happened. I'm not going to say it's all positive. It has been challenging. It has been difficult, and it's still a story that is ongoing. The story hasn't ended, and we are in currently a process that is still developing. But most of the people on board, we are very, very quietly confident that we will get a resolution, and hopefully very, very soon.
Yeah, yeah. I mean, the story. So if anyone wants to go back and just listen to the episode I
Yeah.
did with the bird lady, but for people who maybe don't have that time or did and would like their memory jogged, do you want to give us like a TLDR of what happened in the MMTLP story, sort of maybe up to the point where they withdrew it from trading and cancelled the last two trading days, and then we can move from there forwards after that.
Yeah, so prior to that, it was brought nefariously onto the market by two market makers with FINRA as well. So there was a FINRA involvement as well, and the two market makers. One of them was GTS, and we have a named individual by Ari Rubenstein as well. This was done without company permission, and John Berger has publicly stated that they had no involvement in that. However, FINRA ignored his request and statements and claims that this is something that should not have happened. But I think FINRA were quite dismissive of that. So it traded, I think, for over a year, well over a year, and fairly stable, fairly not much movement in price at the very, very early stages. There was quite a bit of volatility. A lot of people didn't know what was going on and what it meant. I think even John Berger said he got a phone call saying there's something trading called MMTLP. Nobody knew what the hell it was. I think one of the first prominent people that I'm aware of who was found out about it was Terry, from the YouTube channel, Terry Stonker, and he is the one who invested in it. And I think it was just a few cents, and then it shot up, and then it became quite stable. And then obviously we had the spin-off dates. We had the dates where we were supposed to get completion. We were supposed to get one share of MMTLP in return for one share of NextBridge Hydrocarbons. I think one of the misconceptions is that many people invested only for a squeeze, which is not really true. And many people invested for NextBridge Hydrocarbons for the assets, and I'm sure you know that NextBridge Hydrocarbons is an oil and gas exploration company with also significant assets in water as well. So the squeeze was just something that was something that developed because of the situation with regard to the shorting. And the shorting is something that that we know that it was also something that carried on from Metamaterials and Torchlight because obviously they never previously closed their positions, so they had to exit. We know that obviously securities legislation requires all shorts to close their positions with infinite loss. So that's what investors were expecting, and there were millions of shorts. And that's where you could say the squeeze side of things came onto it, and then we did get a lot of attention from other retail investors. Many of them actually invested every single penny of their savings into it, which is obviously never correct financial advice. I'm, as you know, based in the UK, and we were never able to buy more. I certainly would have bought more, but I only had my legacy shares in MMTLP. So I was there obviously as an investor, but not an additional buyer. So that's what happened. And then obviously if we run up to the U3 halt, just to get up to date with that, 9th of December, this was something that was issued by FINRA. So they cited reasons in terms of uncertainty in the clearing and settlement process. And what ironically, what by them having the U3 halt, they have created the biggest amount of uncertainty they've probably ever seen in terms of how it panned out. Nobody knows if they've got real shares. Nobody knows if there's any value. Nobody knows if their shares are synthetic. And also, nobody has, well, not nobody, but the vast majority of investors have not received MMTLP, Next Bridge Hydrocarbons shares in, which was the dividend. The dividend was never a cash dividend. It was always a dividend for an exchange of MMTLP for Next Bridge Hydrocarbon private shares. So many investors were happy to receive that. We knew that it's going to be a private company. It's not going to be publicly traded, but people had some faith in the market. They expected the shorts to close because if we read the securities legislation, it states that brokers will close on their behalf if they do not close. So so it was a case of, well, even if the shorts don't close, brokers are required to close their positions. So if millions of shorts are closing their positions, then the inevitable is a short squeeze. That is the inevitable. And obviously 165 million shares approximately, so it's a low float, and the squeeze was more or less inevitable. And in one of the research that I carried out in one of my videos, not sure if you saw it, there was a stock called DGAZF, and this was also a gas company. I think it was an ETF, and that ran from around about $150 to well in excess of $25,000. In that particular example, FINRA also called a U3 halt. However, they called it after the squeeze. So that stopped trading, and it was also the U3 halt. So this time, obviously, they called the halt before the squeeze. So there were 2 days of trading left. Those 2 days of trading never happened. So contractually and obviously based on what the reason why people invested was for those 2 days of trading. So everybody was denied 2 days of trading, which is, well, let's think about who's benefited and who's lost. So all of retail have lost, and who's benefited is every single short position because A, they don't have to pay any tax. B, they can keep all the profit, especially if they're not required to close their positions. And it's also something that they can use an excuse of the U3 halt. And the brokers never required them to close. So that's what people are worried about in terms of, well, why were the brokers not involved in helping them close their positions? Because surely that's a requirement of a broker. That's what their job is, to ensure all shorts close their positions. Otherwise, you have failed to deliver. So, and then obviously, I'm not sure in terms of a timeline when you spoke to the bird lady where the process was up to in terms of after the U3 halt. But again, there was a lot of things going on at that time.
Yeah, okay, so essentially there was a massive amount of short positions. There was going to be 2 days more trading that was meant to happen in contract and legally by the laws of the market. And they didn't do that, basically. So,
no.
And I know recently they put out a statement, didn't they, that said that sort of like laid out why that wasn't. But I didn't quite understand what their argument was. Like, could you like explain maybe just like why they said the final 2 days didn't happen?
Well, obviously, this is one of the issues that we as investors have been asking for. So what we are asking for is clarity in the reason. So I think what they have is they've just worded something which is quite subjective, quite vague, and that is just using the terminology uncertainty in the clearing and settlement process. So they believe what if you interpret it, that it basically means, well, we did it to because the shares wouldn't have settled. But there was a very, very simple solution, and they believed that that there would not have been settlement in the 2 days, and that's why they stopped the final 2 days of trading. But there was a very simple solution. Rather than stop the 2 days of trading, they could have actually added 2 more days of trading on to make sure everything settled, everything closed, and then we would have had certainty. We would have had every single short position closed. So their reason was 2 days is not enough. So because it's not enough, we are closing this right now to prevent chaos. But ironically, they created chaos, and the very simple solution was add 2 more days on. If you believe it can't settle in the 2 days, just add 2 more days onto the date. So go up till the 14th of December rather than the 12th, but they chose not to do that. And I think what the current campaign is release the blue sheets, and that is a campaign to find out what happened, why it happened, what the data is, how many shares there are. I'm not sure you're aware of the legal campaigns. There's currently 5 legal campaigns that I'm aware of, and that is to find out exactly why they did the halt and why they did what they did. So we have Mark Basile, we have Richard Hoffman, we have Rosa, we have Hands of Steel, and we have Elaine Hensley. So these are all ongoing current legal cases. None of them have been carried out in terms of being completed. So there are still obviously arguments to be presented in each one of those cases. So it's something that is building. I believe there are other cases as well. So all it takes is one victory in one of these cases, and I think it will be a case of obviously, the straw that breaks the camel's back, and Pandora's box could be open. Because if you think about it, let's think about it logically. What have FINRA now got to lose if they just release the data? I mean, it's no longer trading, and all we're asking for is the data, freedom. And the funny thing with FINRA is having done lots of research on them, they're a self-regulatory organization. They're funded primarily by the brokers and dealers, and they claim not to be subject to the Freedom of Information Act. So it's and they also claim to have legal immunity and absolute legal immunity. So it's a case of they're kind of behaving like a law unto themselves. So this is something which is a problem because of things like conflicts of interest, because the brokers and dealers are funding FINRA, and then FINRA are supposedly keeping an eye on the brokers and dealers and regulating the broker dealers. So you pay FINRA the money, and then they regulate you. One question I think I'd like to ask is how many brokers and dealers have been shut down by FINRA? Because of naked shorting, because of synthetic shares, because of failed to deliver. We know it's a huge problem going back years and years. Even Elon Musk was talking about this in one of his very famous tweets. So it's a problem that is, in this particular case, is something that has hit everybody very, very hard.
Yeah. So my understanding is that FINRA has legal immunity because they're kind of acting on behalf of the government as a regulatory agency, and therefore they have the immunity because they're a private organization, they could be sued. So without the immunity, the argument is that all of the institutions that they're regulating would just sue them for loss of business due to them being regulated. But that seems like a really horrible, weird, gray area where a private institution can have government legal immunity. That seems really...
my understanding of the Freedom of Information Act is all government organizations are subject to the Freedom of Information Act. However, FINRA is self-regulatory, although it's supervised and it reports to the SEC. So the SEC is subject to the Freedom of Information Act, and that's why we have had a breakthrough. So there have been some emails released under the Freedom of Information Act by a few of the investors, I believe, And these have revealed some email correspondence between FINRA and the SEC, showing that they knew exactly what was going on, what was happening, and they knew the MMTLP story, and what they knew it was going to be a huge problem. In terms of the immunity for FINRA, this is something they do have. I think allegedly, let's say, they do have an immunity with regard to financial claims. However, they don't have immunity with regard to, let's call it, nefarious actions. So Rose's case, for example, is not a claim for damages. It's not a claim for money. It is a claim for correcting a wrong. So a wrong action, which is something that, so she's not asking them for money, and they don't have legal immunity for that. So there has been precedent in previous cases, and that's why the judge has just allowed, in Rose's case, her to amend her case to present more arguments. And if they did have complete immunity, that case would have been dismissed. It hasn't been dismissed, and she has been given an additional chance to present more information. So they do not have immunity against irregular actions. So the U3 halt, we believe, was not in the interest of retail investors.
Yeah. So I've pulled it up here.
Yeah.
I'm just looking for some stuff to basically to confirm what you're saying. I'm not I don't believe you, but I like to pull up the sources.
Yeah, sure.
The emails reveal conversations between Sam Drady, Senior Vice President of FINRA, and an unidentified SEC representative, indicating that FINRA was aware of the fraud and counterfeit shares occurring in the security, but allowed it to trade for over a year. Wow.
It's
just like you said,
yeah.
It says that's Congress is currently investigating it. Really? Is that true?
Yeah. Well, allegedly. Now, this is another problem that we have. We also have data showing that, in terms of the donations Congress received from hedge funds, it is, I think, possibly going in the hundreds of thousands of dollars to tens of thousands of dollars to probably the vast majority of congressmen. So they are reluctant to officially speak out. We have confirmation that every single person, in my opinion, every single person in Congress knows about MMTLP. However, it has become such a problem that I think they're very, very careful and very worried about speaking about it in public. So I'm not sure if you're aware of the presentation, I think that took place a few days ago, from James Angel at Georgetown University to Congress about MMTLP.
No, I'm not. Please, enlighten me.
This was something that took place a few days ago. And so James Angel is from Georgetown University. So just today, if you go into my Twitter history, you'll see that I've just covered something just today, Mr. James Angel. And what I've discovered is James Angel is a professor at Georgetown University, and he represents the university. However, in carrying out some due diligence and research today, I just discovered that FINRA have an institute at Georgetown University. And in this institute, surprise, surprise, James Angel is a director. So he is directly paid by FINRA. So therefore, we now have a very, very significant conflict of interest because he's being paid by FINRA as a director, and it's all been proven with website links, with images in my tweet.
Yeah, I'm sure I'm showing it on screen here for people who are watching.
And what the situation is now, I have just called out James Angel in a previous tweet, probably, and I featured this in a video. I've identified 10 critical mistakes that James Angel made in this presentation to Congress. He also used one of my video thumbnails without my permission, which obviously is a breach of copyright. However, I'm willing to forgive him for that if he comes to the table and just speaks to us. That's all we want. Come and have a discussion. I'm not going to take you to court for breach of copyright, although as a professor, you should be aware that Harvard referencing system requires you to quote all your sources and where you got your images from. That's just bog standard. If it was a student at university not following the Harvard referencing system, that student would be disciplined. However, Mr. James Angel, as far as I'm aware, failed to identify a source, which was my thumbnail. However, there were many, many other significant mistakes, and I've identified 10 of those mistakes in one of my tweets. James Angel, I've tagged him in, and I've asked him, look, I am prepared to remove 1, 2, 3, or all of them. Just tell me which one is wrong, and I'll remove it. But he has not responded. He did respond to a person called RareDD, and RareDD identified the slide that was wrong, but it was wrong in humor and in sarcasm. However, James Angel didn't recognize the sarcasm. He thought it was a legitimate claim for his slide. So then he replied and he said, please remove this. You're claiming it's mine. It's not mine. He says, yeah, I know, but it was kind of sarcastically done. But he didn't understand the sarcasm. However, for me, he's not responded whatsoever. And I think the reason why he's not responded is because all my claims, I think, are factual. And there were factual errors which you can't deny. He's got things like, the final price was $2. It was $2.90. He's talked about our trading. It should have traded on, people wanted to sell on a Sunday. Well, the stock market doesn't actually operate on a Sunday. Only crypto operates on a Sunday. So, I mean, this is a professor with an MBA, PhD, CFA, etc. And he's making huge mistakes. He also called investors naive and, not aware of the market, words to that effect. So the huge conflict of interest is something that I think because when he went to present to Congress, he did not disclose, as far as I'm aware, his association with FINRA, which is a paid association, because he was there to present everything impartially. And that was not done. And I've just uncovered that today.
Yeah. I'm pulling up some stuff on Twitter here about it as you're talking. Yeah. This is fascinating. Yes. So it seems like you're right. Like he hadn't declared this.
No.
And yeah, I pulled up your tweets as well, which is like it's all there in black and white. Like I mean, academic director for the FINRA Institute at Georgetown's Certified Regulatory and Compliance Professional Program. I mean. It's a recurring theme. This is, isn't it? It's and it's not just in finance, but particularly in the world of finance, where like the people presenting themselves as the independent like reporters or regulators or independent voices are just in the pockets of the institutions that they're meant to be protecting regulating, and the people the investors that they're meant to be protecting, and the the free market, quote unquote, that they're meant to be upholding. It's wild.
Well, this is in black and white. This is there. It's in black and white. It's on the FINRA website. The quoting George. So I think the university now need to take some responsibility about this, because his words, his actions, his presentation is basically going to possibly result in, a negative impact on the investors. He could have said, he could have spoken in favor of the retail investors to say, look, they were subject to market manipulation, they were subject to naked shorting, they were subject to, trading rules which were not followed. If the shorts closed their positions as was required contractually, there would not have been an issue. He's not really explained why the U3 halt and why it was used and why we need the blue sheet data. So we're just asking for clarity. We're asking for answers. I believe they'll come because the lawsuits are building up. It just takes one judge to obviously grant that, and once that happens, I think everything is going to be wide open. It could be a game changer. There is speculation behind the scenes right now that we could be close to a deal. Again, it's pure speculation, not official, and nobody's going to say, look, quote me on this or quote me on that. It's just at the moment rumors, reading between the lines, but we do believe we are close. However, I think the pain for investors is real. I'm not sure if you had a chance to look at some of the community websites. We have,
Hmm.
fairmarketsnow.com. We have mmtlpresources.com. We
Yeah.
also have mmtlpstudios.com, which is a result of all the investors' personal stories, which I think hits people more. People who don't know about trading, they hear the stories, and that's something that can obviously get some empathy.
Yeah. Yeah. I have half of these websites open
Yeah,
right now on screen. I'm like pulling,
yeah, yeah,
like whenever you're saying stuff, that's what I'm doing.
yeah, yeah,
I'm
yeah,
pulling
yeah.
stuff up for people to look
Mhm.
at. It's really so
Yeah,
hopefully one of these lawsuits
yeah,
provides, yeah, gets to discovery.
yeah,
So which so I've heard about Rose's lawsuit when because I
yeah,
covered that with
yeah,
Bird Lady Roller Pigeons. Um,
yeah.
so what about the other lawsuits? Like what? So she's going specifically that she's suing in order to get them to redo those two trading days. Is there anything different about any of the other
I
lawsuits that
think,
you mentioned?
yeah, I think the one I'm right now in the short term the most optimistic about is the Mark Basile one. I think that one is for release of data. He's representing an individual client, so it's not a class action, and it's not representing everybody. However, by default, victory for that one client is actually potentially victory for every single investor. So that's why everybody is watching this with bated breath, because I believe Mark is directly negotiating and speaking to FINRA. I think he may even be speaking directly to Congress. He'll probably be under, NDAs or obviously requirements not to disclose what's going on. It is ongoing. We do have a date in June for his case. And I think that right now that's the one that's giving the most optimism. However, I think the other cases, in terms of Richard and Rosa, there have been a little bit setbacks. However, they are not over, so they will continue in the form of appeals. Uh, but the most promising one right now, I think, it is the Mark Basile case, which we are watching, and hopefully, but one of the things that, in terms of what FINRA are doing in his particular case, they are just asking for extra time. So he said, look, release the data, and their response to the judge is, we need more time. Well, why do you need more time? Well,
Hmm.
if you think about it, the reason why they need more time is to come up with an excuse for not releasing the data. We're not asking for money. We're not asking for compensation. We're not asking for damages. We're just saying, how many shorts were there? How many naked shares were they? Who was doing the trading? And who were the buyers? Who were the sellers? Etc. And everything else that it would be revealed. So they have asked for more time. I think it's 2 weeks to come up with a defense of not releasing that,
Hmm.
because at the end of the day, it's in the past. It's already happened.
Yeah.
And why hide something that is not going to impact the market today? It's not going to
Yeah.
impact the market today. So
Well, I mean, I think the issue would be that it would, if you release this data and
yeah,
it's damning, which it seems like it probably is, right?
yeah,
Then
yeah,
then the question becomes, so right, okay, so you did just halt trading for
yeah.
to protect the shorts, and
That's right. Yeah,
then that just plays into a theme. Like, I mean, I'm sure anyone who's been watching the GameStop saga will be
yeah,
like, oh, that sounds familiar.
yeah,
Just protecting the insiders. Anyone
mm,
that's been watching finance probably for like any length of
yeah,
time will recognize
yeah.
this, and it really gets to the heart of something. Like, I'm in the middle of trying to finish this book about GameStop, and
Oh, okay. Yeah,
at the minute
yeah,
I'm sort of at the point where I need to. I'm like on, I don't know, the fifth edit or whatever, but
yeah, yeah,
I'm back around to the point where I'm having to talk about naked shorts,
yeah.
and I just
It's staggering, isn't it? Yeah,
it's just, I don't even have the words, right? Like,
I know.
how would you categorize, or how would you like define, or even like explain how you felt when you first realized that this was a practice that just sort of goes on, like without penalty?
Yeah, well, I think even where there have been penalties, they've been very, very. insignificant. I think we look at the company that made probably one of the most amounts of money profit-wise in the previous accounting records was Citadel. If you look at their, I mean, we're looking at billions and billions of dollars in a year which is the cost of living year, which is the inflation year, which is the year of the war. And it's the year where we are probably been the closest to a recession, where you could say it's not officially a recession, but it's almost a recession, all but in name. So obviously their profits have been record-breaking profits. So if you look at one of the reasons why, it's because you look at the chart of almost every single penny stock out on the market, and look at their, let's say, 2-year chart, 1-year chart, you'll see a huge spike around about 2021, and then a huge decline to present period. Almost every single, not only the penny stocks, but almost all bio stocks, almost all tech stocks. The only ones that are probably immune mostly from that would probably be the S&P 500 and the mega cap stocks, but almost every single stock, that's what's happened. So that's a direct correlation between what's happened with all the stocks and the profits of Citadel. So I think that's what's wrong with the market. I watched I can't remember the name of the documentary now, but it was showing an example where there was a company involved in research for cancer, and it had to go into liquidation because the share price was just traded and down all the way to close to as zero as possible. And they were on the verge of working towards a treatment for cancer. And I think that company, their technology, their kind of ideas on cancer was bought by a European company. Luckily, I think they are developing it, but that's just one example. And how many others are there like that, where companies are being destroyed? You look at Mullen Automotive. It's just had a reverse, had a stock split, and it's still getting hit to the cents. I think it's trading probably at about 75, 80 cents right now. So it's a big problem, but I personally think it's a problem in the US markets. I don't think it's as big a problem in the European or the UK markets. It is certainly a big problem in the US markets. And until Congress acts, until the government does something about it, I don't think we're going to see change. So what we need is probably from some honesty from Congress, really, to make that change. And when you have conflicts of interest, it makes it more difficult. And it's not an easy battle. It's a huge battle, but it's. I mean, in your opinion, how similar is what our story to what you're researching? Is it with GameStop and AMC?
It's wildly similar, and
Yeah.
it's just this story of liquidity, of like everything in the market serving the god of liquidity, right?
Yeah.
In the
Yeah.
the entire reason that market makers have the ability to just like magic shares out of thin air, say here you go, there it is, and then fail to deliver on it, is just, it's all a function of everything is about liquidity. It's just, that seems to be the only goal. And that, to me, the weird thing about that is that means that price discovery doesn't happen.
Yeah.
Right?
Yeah.
Like, obviously it does to a certain extent, but like when there's infinite liquidity of everything, whether that's cash from the Federal Reserve or stocks that you can buy, or individual shares of a company that you can buy, like, then there is no real, you can't get a real grasp on what the real price of anything actually is. And every single time, like, because there's websites like about these like over shorting of things. Like there's the stopnakedshortselling.org. Like there's literally an entire website dedicated to going through cases where stocks have been oversold because of greed. And it just, I don't. I might have been looking at this for 2 years straight, basically at this point, and I'm still just stunned every single
Yeah,
time I look at this
yeah,
and go,
yeah.
no,
Wow.
but like nobody in a position to regulate or legislate about any of this
Yeah,
seems
yeah,
to think this is a problem or is even aware that this is going on. Like,
yeah, yeah,
and do you know what the like? Do you find this actually sometimes when I'm talking to people
yeah,
about GameStop, or sometimes if I'd mentioned MMTLP after I was like talking to Bird Lady Roller Pigeons about it, but
yeah,
I'll be like, yeah, so there's like, say, X number, there's 100 million shares are meant to exist of this company, but there's 140 million minimum in circulation, and they go,
yeah,
what? How does
mm,
that work? And you go, well,
yeah,
it's because it could be through share or short rehypothecation,
mm.
but most likely it's through this ability where market makers can just print shares and then not deliver on them. And
That's right.
people
Yeah,
don't believe me.
yeah, yeah,
They
yeah,
think I've
yeah,
lost my mind when I try to
yeah.
explain this. Like, do you
I
have
know.
this problem?
Well, yeah, I think that you've identified a very important point there, and I think one of the key differences between the GameStop and MMTLP is in MMTLP, the key and the biggest difference is that trading was supposed to stop, and 165 million shares were supposed to go to approximately 64,000 investors. So if you follow the rules of trading, there should not be any synthetic shares. There should not be any counterfeit shares, and that's how it should have played out if it was following all the rules. And now you could say the U3 halt was designed to avoid proof of count shares, to avoid proof of naked shorting, to avoid the proof of failed to delivers, and also, in my opinion, to avoid a squeeze. And I think the squeeze would have, from certainly from the figures I've seen, it would have gone in excess of $1,000. And I think that's being a little bit conservative. However, we can't prove that because we were not given the 2 days of trading. We never saw them close their positions. But everybody who knew trading, who understood trading, knew that that was inevitable. However, the shares can't be reconciled now because what FINRA said is to avoid uncertainty, we're coming up with a U3 halt, and they've created the biggest mother of uncertainty in the history of anything I've ever seen,
Mm.
because people have got, they cannot access the money now. They cannot, even if, let's say, for example, you're in GameStop, you can still sell. You might be 80% down, 90% down, but you can still sell and get something. Investors here, some have invested $1,000, dollars. Some have invested 10. Some have invested 50,000. Some have invested 100,000. And I'm sure you're aware, some have invested millions and millions and millions, and they cannot access a single dollar of that now. And that is, I think, the key difference. And that's why there is very, very significant heartbreak for many people. And many of them had very, very good lifestyles before, and all their money is now tied up in this since December. So we're kind of around the 6 months mark now, without an access to a single cent, never mind a single dollar, to a single cent. So everybody accepts the risks. We all accept the risks. So nobody, not one single person would have complained if the squeeze never happened, because the squeeze is down to market forces. And if the market forces, and if everybody was wrong about, the shorts, and there were no, all the shorts had previously closed their positions and we didn't know about it,
Mm-hmm.
we wouldn't have no complaints, because, the data is there showing that they're closed. But that never happened. So it's a case of who was really protected. That's the question, really.
Yeah, and that's ultimately the really sad question, because it seems that the answer is always the system, and not the rule of law, which
Yeah,
seems like a really simple thing to one.
yeah,
Here's the rules, follow the rules,
yeah,
break the rules, be punished.
That's right. Yeah.
That's the. It really is. Like, the deeper you look at things like this, the more you realize that, like, the financial world is just, it's just cowboys,
Yeah.
and
Yeah. 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 Shocking.
yeah, it's
It
and these
really is. Yeah.
they they buy all the media companies so that that
Yeah.
no one says shit about it. They
No. No.
refuse to advertise on the ones that they don't own, that
Yeah.
that don't toe their line, and therefore massively pump up the ones who do. Being
Yeah.
that these are the most powerful institutions probably on the planet.
Yeah.
Some of them at least, anyway.
Mm.
They
That's right.
they buy off the politicians
They
so that
do. They do.
no one regulates anything. And even if you get the odd one that comes in, they've bought
Yeah.
enough of them to be like, calm down there.
Yeah.
All of the regulatory agencies are either self-regulatory, or they're stacked with former or future people from all of the the top levels of these institutions. And
That's correct. Yeah.
it's
Yeah.
like the
It's
only thing we got left is these lawsuits.
Yeah, for now. For now, I think the solution for now is lawsuits. Because without the threat of lawsuits, FINRA will not do anything. It's the lawsuits and also pressure on Congress. So we need somebody from Congress to put pressure on FINRA, to put pressure on the SEC, and this needs to be settled. People need a solution. And the vast majority of people, if you ask them what the solution is and what they want, the vast majority of people are not really interested in a nominal value, because whatever nominal value you come out with, it's not going to be agreed upon. So everybody wants 2 days of trading, shorts close their positions, and whatever the market forces take the price to, that's what happens. People who choose to sell will sell. People who choose to hold and get the next bridge will get next bridge. So as close to that as possible. Now, one reason why that is possible is because the brokers still have all the shares in street name held. They've not been transferred with AST. So if they were transferred with AST, they would no longer be able to be traded easily, certainly. So in theory, that is still possible with all the shares that are still held by the brokers. But it would require the SEC, it would require Congress, and it would require FINRA, and it would require NextBridge Hydrocarbons for that to happen. And I think that would be a solution that many people would be happy with. Whether or not we get that as an ideal solution, I think in reality there may be some compromise. What that compromise is, we will have to wait and see, and I don't know.
Yeah, we really will.
Yeah.
Anyway, before we finish, I did want to ask about Nvidia, because I had mentioned it. So, basically, Nvidia is close to what I think it's $1 trillion valuation now.
Yeah, I think when the price was over $400, it was very close to $1 trillion in terms of valuation, and I think it's been driven all by the AI. And in the previous video, I looked at 14 catalysts, which were well timed to drive that up into the 400. The analyst price targets pushed everything up as well. To I think the highest analyst price target now for Nvidia is $600. And I think it is currently today. Last time I saw it, it was going through a little bit of a sell-off. But if you look at the chart, that is inevitable. I think that sell-off, it just could not continue with those green candles as it was. So people were going to take profits, and it was a stock that I've held for more than a year, and I was in the red. And I did sell yesterday with around about 63% profit, and I certainly will consider buying back in. Hopefully, if it gets to a price that I'm happy with. But in terms of the future, I think it is a tremendous company. I think it's got huge revenue growth. It's profitable, and I think whoever came out with Chat GPT, they have just changed the world. They have transformed the world, and this has had a huge impact. Most of the AI stocks are doing exceptionally well, whilst the rest of the market is suffering. Yeah.
Yeah, yeah. I mean, yeah. I gotta say, whoever come up with Sam Altman and OpenAI, they're really about to blow the world up.
Yeah,
Although I read this amazing stat, right, that only thirteen
yeah,
percent of the population in the US have tried Chat GPT. So like all the people who are using it all the time for loads of
yeah,
stuff are like they're still the early adopters. They're still like the first few percent to really go for it. So like if anyone's already sitting there being like, oh well, everyone's using it, there's no point, it doesn't set me apart
yeah,
or anything. It's just like,
yeah,
no,
yeah,
no, 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 no.
yeah,
Like I'm already using it to help me
yeah,
with timestamping my videos, for writing
yeah,
summaries from podcasts, for
yeah,
writing tweets based on the summaries of the podcast, like loads of stuff that
yeah,
I just hate doing,
yeah.
but I have to
It's,
do.
yeah, it's a game changer. It really is, and I think it's good news for all the companies. It's good news for all the AI driven stocks because everybody's is tagging onto it. Microsoft, Nvidia, Google,
Hmm.
all the smaller, even the penny stocks such as AI, they're all benefiting immensely. And I think it can be applied to many many angles, including the medical sector as well.
Mm-hmm.
And I think from what I personally have seen, I think the biggest problem could be along the lines of plagiarism especially for the academics, the universities, because it's not traceable with the current plagiarism software as far as I'm aware. I think there are some out there, but it's going to get harder and harder for the academics to keep an eye and keep tabs on the potential of it. So I think it will eventually lead to a change in education, possibly more
Yeah.
exams and less coursework type of assessment. But in terms of the benefits, I think the benefits certainly far outweigh all the problems, and I think it is great, obviously development in IT.
Yeah. Yeah. I mean, I hope that people use it as a tool and not
Yeah,
as not like a thing to like they see it as a tool, not something to replace people. Because I think that
yeah,
everyone's like, oh well, we don't need writers now, and it's like, no,
yeah,
that's not
yeah,
quite how it works. Like you're still going to want someone to present something interestingly,
yeah, of course,
or
yeah, yeah.
I don't know, just a bit of
Yeah, I've seen these pictures of AI created human beings, and they look scarily real. And I'm thinking, wow, that's a real person, but apparently it's an AI generated person, and it's very scary as well,
yeah,
because it's changing. I think it's probably going to have the biggest impact in technology, probably since I would say TikTok. TikTok transformed everything as soon as that came on the scene, and I think it had the biggest growth of a social media platform that I've ever seen as well. So I think similar with Chat GPT and everybody getting on the bandwagon. So Nvidia has benefited from that, and good luck to Nvidia.
yeah, yeah. Well, solid company. They make great stuff, like the
Mm,
processors in this laptop.
yeah, and mine as well. Yeah, yeah,
Anyway, man,
yeah,
it's been an absolute pleasure chatting. I really want to thank you for your time. Is there
yeah.
anything you want to plug before we finish up?
No, yeah, just if anybody's watching, go ahead and check my video out where I do cover stocks such as Nvidia, MMTLP, Mullen Automotive, and others. And obviously, if anybody, all the MMTLP investors, obviously, a message for you: we're not giving up the fight. I will be here until the end, and we'll get through this. So, good luck to everybody.
Yeah, I fucking hope so. Good on you, man. So yeah, good luck to all MMTLP holders. I wish I could buy some, but yeah, as you mentioned, UK based, and I was late to the story. So
Yeah, yeah. Okay.
anyway,
Right.
yeah, thanks very much, man.
Right. Great.
Hey everyone, thanks for making it right the way to the end of the podcast. I love that you tuned in this long. Do me a favor, hit subscribe because 80% of you bastards are not subscribing, but you're watching my videos. See you next time.